Hey, good morning, everybody. Welcome to the Forex.Today YouTube channel. Today is a banking holiday in the United States of America, but let's do a quickie anyways, huh? Let me remind you that trading is risky. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go. So yes, it is a banking holiday in the United States of America, but the markets are open, so whatever. It's an opportunity for us to get together quickly as a community here at the Forex.Today channel to align our satellites and prepare for the week. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Please visit TradersWay.com. Open a demo account today. We hope that these webinars are helpful. We hope that you're developing skills like patience and discipline, not just technical and fundamental analysis. And we want you to succeed. It's a symbiotic relationship. If you succeed as a foreign exchange trader, we'll succeed as a foreign exchange broker executing your trades for you. So we look at this as investing into you, into your education up front. So think of it that way. So if you are enjoying these webinars, please pay it back by visiting TradersWay.com. Also, just heads up, click down there to subscribe so that when I start these webinars, you're invited to join. You click a button, you're brought right in. Please like, and also please comment below if you're watching a video, or I should say a recording. So thank you very much. Namaste. Thank you very much for attending today. Thank you very much for being a client of Traders Way. Let's get going. Bum, 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 bum. So yeah, let's just go through it very quickly. You know what? I'm going to do the yens later. Well, you know what? This is very helpful. Do you remember talking about this top being an obvious top for multiple reasons? We drew this as resistance. We drew that as resistance. So even though we were up and up and up and up and up and up and up, we did a conversation here about knowing when to hold them and knowing when to fold them, knowing when to walk away, knowing when to run, and all this kind of stuff. Okay, multiple reasons for you to have taken profit. Now, if we zoom in a little bit, the next conversation was, if you were a bear, how would you sell it? And it was sell the rally and down. And if you're a bull, what was the conservative way to re-enter? I'm trying to get this kind of, well, let's just delete it. And we had a plan A. We had a plan A of let it come up high, let it come back down, and then buy it. Or plan B, if you're a bull, wait for it to come down to this area and then buy it. So the bears had their plan work out. Plus, you can see the lower low, lower high, lower no scenario. Okay. And now that the bears are all happy and comfortable with everything, they've run into some massive risk, and bulls should be living in this area. Okay. And the weekly trade plan for bulls, you know, is buy it and up, 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 up. Okay. So right now, we don't know if the bulls or bears are winning. The bears did what they were supposed to do. This is not the world's greatest trade. I mean, it's not really a swing trade. It's only a price action trade, which means there's vulnerability here because this is, well, the way I set it up, it's a swing trade. It could still come down and then bounce here, okay? But that's the price that I'm looking at to be bullish on this, okay? But the big thing is, even after this massive rally, our technical analysis and our leading indicators told us that this was a great place to take profit. And look what happened. It was a fantastic place to get out. Okay, so that should be a lesson. That should be a keeper. That you should write that down. How should you behave? You know, what happens when lots and lots of people make lots and lots of money, and then you run into, you know, solid resistance? Well, all the bulls take profit. Why? That's where they're supposed to take profit. Okay. This is pound dollar, and this one's interesting because we have this up in here. Okay, and that sets up a potential counter trend trade, and holy smokes, did it counter trend. I wouldn't have thought that. In fact, you can see that I have a plan here. I have to kind of move it. Oops. I'll move that. You can see that I have a plan A here. Like if you were going to buy it back, buying this dip was a classic place to do it. And then for show, it's gone. Holy smokes. Gap down and everything. But is this, wasn't there news over the weekend that once again everybody hates Theresa May? Isn't it like anti-Theresa May again? No, that's all right, Raymond. I actually started a bit late anyways. So this is like pound being punished more than technical analysis, so there's a little bit of fundamentals here. But now what? If you wanted to be a cheeky monkey, you could say counter trend. Okay, you could, and then try to play this back up. Yeah, you totally could. If you're a bull, you're going to play it this way and try to take it back up above this, you know. Yeah, you could. Doesn't mean you have to. Okay, bears should know that that's a terrible place to sell. Okay, and it's opened out a position anyways, right, for a bear, so that adds more vulnerability on a weekly basis. I'm going to skip these two and go way over here to oil. And boy, oh boy, how long have I been hoping for oil to rise? Well, this is yet another challenge of the 21. Wouldn't it be interesting if this opens as a bullish week? Okay. It's been a while since we have it. Well, I guess it's been a week since we've had a decent 5-day cross. So how are you going to play it, guys? Have you decided whether you're going to be a bull or a bear? Notice how we preceded this week by hitting the weekly target, and then on the last day of the week. So, you know, this was the expected low for the week. In fact, this is down here is the expected low for the month. So you should either be buying this as a dip or buying the next dip. Okay, and I've already got this planned out from last week. Maybe the swing trading group and I did this one. But anyways, wouldn't it be nice if this green zone and this gray zone below it help the bears get out, and maybe, just maybe, the bulls start tiptoeing in? But bear in mind, this is over, this is filtered through a bullish lens. So basically, I have everything I need, but it's still a hope type strategy because it is not yet bullish. But I want it to be bullish, so I'm going to find 9 reasons to make it bullish, and that could be a dangerous recipe. But nonetheless, between 81.17 and 59.65 is a bullish buy zone. Okay, and we did speak specifically about this last week. Do you guys remember? When it was like 59, and I'm like, so what? What's the big deal? Oh, well, now it's going to drop to 50. No. So here we now, it was 59, and now it's 61. Now what are you going to do? Chuck says it's been riding the 4-hour 21 all the way down. Absolutely true. 100% true. Okay? But that's so 4 hours ago, okay? So what I did was I went back and looked at previous support, and you could probably pick on this area too. Let me grab this part. Okay, drag that across. Okay, so I know that this is supportive, that is supportive. Okay, so then let me kind of click in a couple of here. So I'm kind of okay in a zone, as in a double bottom. Now, a double bottom is a leading indicator because you can see it coming. Okay? So you're like, oh, we're getting in there. All right, great. Now, on top of that, we have a monthly target here. This X is where the large institutional investors that are bearish on WTI are supposed to get out of the market. The green area is where, traders are supposed to take profit for the week. So I got this dark gray, which is long-term support, leading indicator, double bottom type stuff. X is the monthly where institutional investors are supposed to get out of the market. This is where weekly traders are supposed to take profit for the weekend. So yes, we have not even broken the 4-hour 21. However, the bases of a potential reversal may outstrip this lagging indicator. So I could totally be wrong, okay? And that's why I'm saying I'm filtering this through a bullish lens. But if I was going to be wrong, let me tell you how I would do it, okay? What I discussed last week was you could either buy it now or let it rise up, come down, and buy it today, sort of in this area. So last week on Friday, I talked about buying it around this, I don't know, the $60 barrel area. And maybe it'll rally up, breaking this because of all these other reasons. Okay? So Chuck says, surely we would need a clear reversal pattern after that drop. Yes, that would be ideal. Now, this is a reversal pattern on a smaller time frame. So like, for example, it's up $1.50, right, Chuck? It's gapped up. So how do you trade a gap? You let it retrace to fill the gap. So here's the gap, right? So a gap trade is like something like this. Okay? Right? So you got the 1, 2, 3 pattern, which is a reversal pattern off of at least 2 levels of support, minimum, okay? Plus you're in the swing buy zone for the week, okay? Now, does that mean it's going up? No, but if I was going to lose money as a bull, that's a half decent way to lose money. It's not mentally deranged. It's not a guess. It's not a bet. Now, there might be some risk associated with it because you're like, wow, man, we haven't even broken the 4-hour 21. Cool, that's right. But if I bought this, this would probably be the trade for the day. It would go up to like 63. I'll make a couple of bucks. And then maybe Tuesday it's back down. And then maybe Wednesday you and I buy it again back at the 61 area. And now we're trading basically a 1, 2, 3 of a double bottom on a higher time frame together. So it's just how you want to enter it, right? Now, to go with, so Chuck, if you are still a bear, like my goal isn't to talk you out of it. My goal is to teach you, like, if you were a bull and you wanted to be aggressive, how would you do it and how could you justify it? All that kind of stuff. Yeah, if you're a bear, yeah, well, you were supposed to sell about 6 hours ago. Right, that should be, right, not just the 4-hour 21, but you can see I already have it highlighted here. It's the roll reversal. It's just pure price action. So a bear would have already done it quite a while ago, okay, like this. But I've been clear on the way down, I want this to go up. I've been very, open with my frustration, but try with the hopes of teaching you patience, right? But could it just go up to this 21 and down and up to the 21 and down and up into the 21 down? Yeah, but it doesn't mean I need to be selling. Okay. Right. So you're saying your plan has been to look for a reversal around 60 to 58. I'm only saying that we got it. Double bottom, higher high, higher low, weekly swing, higher high, higher low. I mean, right? So my only argument is we've had all of that. Oops, that's not what I want to do. Delete. Okay, this way. Okay, down to the area I expected a reversal to happen, like you said, 58 to 60. Well, there it is. That's 58 to 60, right? And in that area, we got what I was looking for. Is all I'm arguing. We got the target. We got the double bottom. We got the 1, 2, 3. We got the weekly swing. So the only thing holding us down at the moment, and well, you know what? Let's do it this way. Well, I don't think these arrows work very well, but let's try it. This is where bears are going to sell. Yeah, couldn't be any smaller. Can I adjust that? Probably, yeah. Can I make these bigger? Doesn't look like it. Ooh, get out of here. All right. Bears are going to live here. And where was it? It's a little higher, I guess. And bears are going to live here. Okay. So as a bull, I already know that as well. Yeah, Peter. Well, stops can go two places, Peter, depending on the time frame. One stop's here. One stop is here. Okay. Now, if you're following the typical rules of engagement, your stop's supposed to be here on either. Okay. Not because it's a lower low, but because it's below the S1. Okay. So again, target, double bottom, higher high, 1, 2, 3. You could have longed it last week right there. Okay. Gap up, fill the gap. There's another opportunity. The only place bears are living is here, and they sold it as they were supposed to. So now it's the real battle here. Okay. That is pretty conservative, isn't it? Long at 60.65, stop at 60.35. You'd be more conservative than that, then drop your trade size. Really? Wow. So you're basically a scalper then at that point. Okay. Yeah, well then just, should we be more well, see, that's funny. I consider that more conservative, having it farther away. Now, you're looking at it like it's more aggressive because you're risking more money. Well, that's not what I mean. I mean, cut your lot size. So, for example, if you typically have a stop loss that's 50 pips away, and I say, well, in this case, it's more conservative to have it 100 pips away, and you're looking at it like, well, that's twice as much money. No. Cut your lot size in half. Risk the same amount, but have the stop farther away. Because your trade must just truly suck if that stop gets knocked out. Right? And we all have those trades, but you shouldn't be losing trades like that on a regular basis because you're, again, wrong in direction and stuff. In this case, that is the one risk that we're taking, we're going against the 4-hour 21, but we're believing the support. So you have to pick a team, right? So I'm believing support over believing the 4-hour. One of us is going to be wrong. Bulls are either going to win or bears are going to win, right? So if the 4-hour wins, we were just wrong on direction. We were wrong on the reversal. We were wrong on the support. So if that's the one risk that we're taking, then you should have your stop below that big support. And you're like, well, that's like $3 away on oil. Well, then cut your lot size so it's still, once again, no big deal. And if it turns out that you're correct on the reversal, you can start tiptoeing in more trades to get it up to the full investment size that you prefer. And if you don't like that strategy at all, then let it reverse even more. I'm just saying on a small time frame, like a 15-minute chart, it reversed on Friday at exactly the place that that we all expected it, somewhere between 58 and 60. So on a 15-minute chart, we got what we wanted. Now it's happened on a 1-hour chart. Now the next thing is to wait for the same thing on a 4-hour chart. So it's not that we disagree. We're just on all different time frames. A 15-minute trader would have already been in it. An hourly trader entered an hour or two ago. And a 4-hour trader is now interested. It's just time frame, right? Like Einstein's theory of relativity. It's just from your point of view. One guy reversed a long time ago, one person had just reversed, and to the other person, it still might reverse, it still might not reverse. And everybody is right. All right, euro dollar. There's that stupid dollar strength. All right, so let's go back. Let's find out what we know. Okay? We know that bulls bought this, it's the 12th today? 12 days ago. Okay, cool. And they were loving it. And they absolutely knew they were right. And then this broke. So at that point, we talked about just letting it fall. And the next opportunity is maybe it bottoms back out again if you're a bull. And if it does, you have the opportunity to buy it back. We talked about this being the old support. We talked about this being the monthly M2. We may have talked about this being the new weekly M2. So we know weekly swings are going to be there. Monthly swings are going to be. All the bulls are going to be there, or none of the bulls are going to be there. Okay? So here's the issue. Some of you guys are talking about reversal patterns and stuff. I'm not interested. Okay? If I'm a bull, this is dead to me. Okay? It's betrayed me. It's lied to me. I don't trust it. I don't like it anymore. I stopped loving. Cool. Now, how about the bears? Bears got exactly what they wanted. We talked about this being an Arctic turtle situation where they stretched their neck out, they caught the target, and then it collapsed. And according to the world of bears, this is clear as day, doing exactly what they thought it was going to do, and their target is down here. As far as a bear is concerned, we're on our way to $1.11. And that's that. And they had no doubt about it. And yeah, and they're totally confident. Okay? And that's all it is. So this was a trade plan that failed, yet provided as much as, just shy of 200, 180 pips. 180 pip failed trade plan. That ain't bad. You said that about oil too. Don't you need USD weakness? Well, it's one of these things. Does the oil create the weakness or the dollar create the oil? So, yeah, so I have to admit, I want euro dollar to go up, not down. I want oil to go up, not down. So what I'm looking for over the course of the next really 48 hours is for things to change. But right, since I'm not in the market conditions that I'm looking for, it's my job to either throttle back my risk or stop trading altogether and use my technical analysis to identify when market conditions are favorable to my trading. Like, think about it this way. Like, how many hedge funds do you think have like $1 billion under management, and they've built a portfolio and they did nothing this week? Imagine every time you made a trade, you had to file something with the government disclosing the trade, and you know it's going to be posted in like Barron's magazine at the end of the week. We're at the end of the quarter, right? Like, big institutional investors don't trade every single day, or maybe not even every month. I've read about many hedge fund managers that, once or twice a year, maybe buy a new stock. So all I'm saying is, it's not crazy to say, well, I'm a macro trader. What if you described yourself that way to a potential client? I'm a macro trader. I look at macroeconomics and not just the business cycle in the United States, but globally, because this impacts the flow of money through the interbanking system around the world. Okay, so I say, well, I believe blah, 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 blah. I believe the US dollar should weaken, let's say, because they want to buy a whole bunch of stuff from foreigners. Great. Doesn't mean I'm right, but it would be my job now to wait for those market conditions and then trade like a madman. And then when the market conditions change, freeze. Okay? It's not the only way to trade by any stretch of the imagination, but it's one thing that you can ponder. You make a lot of bullish trades when the market's bullish, and you don't trade at all when the market's not bullish. If it's sideways, not interested. If it's down, not interested. Now it's bullish. Trade, 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 trade. Profit, 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 profit. Stop trading. Okay? And trade when you have an unfair advantage, which means you're always, always, always looking ahead, identifying places where market conditions can change, and looking for reasons for market conditions to change. And you're set up and you're ready and you've got all these ambushes ahead and you're using all your leading indicators and you're waiting and waiting and waiting. And then you say, aha, gag Zeus, that's it. Bye, 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 bye. Okay? Just one way, guys, not the only way. You can scalp all you want. And ideally, over time, you actually have multiple trading systems. Imagine, like, again, let's go back, because I know many of you want to trade as a professional one day. Imagine you're running a Forex trading firm and it offered products to your customers, to your clients. Okay? And it's like, oh, well, here's a high yield program you can be involved in. Here's a dollar only program you can be in. Here's commodity currencies program you can buy into. They're like, what's that? Oh, well, we have the Canadian dollar in there. We have the Australian dollar. We have the New Zealand dollar. We have the Brazilian hey-hi, so on and so forth. And you have a portfolio of commodity currencies. And of course, on top of that, if you're trading commodity currencies, don't you think macroeconomics would impact the demand for said commodities? Sure. Does that make sense? So maybe you think if you're trading like that, like, what if you had multiple accounts at Trader's Way? You have a fixed spread for scalping. You have a variable spread for day trading. Right? You have another one where you just trade commodity currencies and you're long only. What if you only bought or got out, right? You only bought or took profit, or bought or took profit, or bought or took profit for all these commodity currencies. You buy Aussie dollar when it makes sense, right? Or Aussie yen when it makes sense, and you move your stop and you just leave it there forever until you get knocked out and you collect. Now in that case you have a carry trade, so maybe you have a carry account, right? So I'm only challenging you to think of your trading and your trading account differently than just throwing it down a bunch of trades on the 15-minute, Euro Swissy chart, because that's what you do all day, every day. I'd like you to think of your trading from different points of view, different angles. Again, different. It's relative to how you look at your trading. Okay, let's go through the yen pairs. Okay, what happens when a weekly target runs into a monthly target? Everybody gets out. Holy smokes, right? Look at that. This is the projected top. Well, not for the month, but that's the bearish selling monthly pivot. And then above that, the pink zone is where bulls are supposed to take profit. So that's bulls getting out, bears selling, and look what happens. Holy moly. Holy moly. So now what? Well, this is an out of position trade, so you'd expect it to slam into the target early, which then sets up a potential counter-trend trade. Counter-trend trade assumes that by the end of the week, we at least touch the weekly central. So that puts us maybe trying to climb our way back up all week. Okay, so this assumes what? The stock market going up? Okay, maybe, right? Right? So get out now for euro. I was in from almost. Well, first of all, you need to do your analysis. So let me explain it from a different way, because my job here isn't to tell you what to do. It's your money. It's your trade plan. Okay? In market conditions like this, very often, okay? In fact, I would almost argue almost always. But I don't have any numbers to do, right? But in my 15 years of experience, very often, if not almost always, in a situation like this, if you hit this gray zone on a Monday or a Tuesday, traders take profit. And after that, I really don't know what happens. Very often, but not always. The bears get out, the bulls get in, and we take it back here. Sometimes it comes up, hits this area, and then collapses, and sometimes you find yourself way up here. It's maybe 50-50, but it all starts with a change in trend here. Okay? So this is a 4-hour chart now. So what if you're on a 15-minute chart and you're following this down, and then you hit this green zone and you see something that looks like potential for a reversal, maybe a giant green candle? Should you take profit on your bearish trade? You have all the justification in the world to consider doing so. But it's not my decision. It's your money. Okay. Unethical aspect of gold. You know what? I almost brought it up, and then I ignored it on purpose. We can go back. Okay. Nothing's changed, right? We're still here. So I had this as a support, this as a support, this as a support. And this was even when we were falling. So there's two things to consider here. Okay, I have this as support. It might go up here. Now, different from that analysis, right? You could argue that this is an R1 top. It's not quite, but you could argue it. And that would put us to an S1 bottom, which I already have marked. So long story short, I talked about this about 8 days ago, and nothing has changed. Okay? So what do you do when I say, oh, well, you're at support? Well, you certainly don't sell. And you could possibly, if you wanted to, and in particular, if you have always been a bull, you could consider a bullish trade. Okay, so this is on pretty high time frame. So now you drop into a 1 hour. And what would you need pivotally to go long here? Well, you had your opportunity earlier in the day for a weekly swing, and that hasn't quite worked. You can see it came up to resistance, lower low. Now it's made a lower high roll reversal. So bears look like they're selling this. And that doesn't leave me with a lot of confidence, okay, in the up. So if you want it to go up, I guess you would need what? Let's kind of set it up almost like an inverse head and shoulders. We'll drag this across, okay? And then what? Now we got to destroy those moving averages, and then it's going to come down and retest, and now it's going to roll reversal off that, and then through this pivot and all of that. That's not a lot of hope, but that's how you do it. It's a bit late to be selling this, but if now you're on like a 15-minute chart or a 5-minute chart, and you were just scalping, you could. See, like this is clearly a sell on a small time frame, clearly, right? Like duh kind of stuff. So now if you were a bull, you could wait here and say, well, what if it made a higher high? Then you buy a dip here and hope that it breaks. And then if it breaks, then you can buy the next dip, next dip, next dip. Okay? But for those who are bearish on this, the more ideal place to be selling is like way up here, okay? Which happened Friday, and that's why we front run in the swing trading group. Okay, so the way I teach it is if you happen to be a bear anyways, and it's like Friday, you should be setting up these trades up in here. But I don't even like that. I don't even like that one, so forget it. Like, yeah, so I definitely wouldn't sell here unless it was just scalping, and that does, you can do whatever you want because it lacks direction. So you could scalp it, but I'd rather observe this price area of, let's say, what is it, 1207? Somewhere around 1207, 1205, doesn't matter. Somewhere in here, I would prefer to observe a reversal pattern, which then gives me an upside target of 1240. So maybe I end up buying it at 1210. I'm going for 1240. Okay. And this is going to be the challenge here again. Okay. Okay. Notice that if I do get this reversal here, it is going to be an M2 play, which gets us to M2, which gets us to the resistance. So that kind of thing, right? Oh. So remember, it's a banking holiday today. We may not have the normal volume and volatility that you're used to, which means it makes it an additional level of risk. That's why I'm not dressed professionally today. That's why I'm all casual. I'm also wrapping up my paper. I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 academic studies about social welfare systems all around me. Whoa, I'm in a world of welfare. All right. So that's I'm just wrapping up my paper, but you know it's neat being a currency trader that's focusing on economics I can do things like bring up studies from the OECD, because I know there's lots and lots of great information and studies there. Didn't find anything interesting. But, you know, it's the same source where I get economic data about the health of the economy and all this kind of stuff. The OECD is a big deal. Lots of great information there. As a macroeconomist, I would just assume it from time to time you visit the OECD website. So it's kind of cool being in school. I'm like, oh, I know where I can get data, the OECD. Joe, yeah. So Joe, this year and last year, I did these weekends where I can debate some of these economic potential, or let's say proposed or considered economic policies by the Fed. And I get to spend a weekend learning and researching and debating these economic policies with people from the Fed. So, like, thank you, Harvard, right? So this is just my sort of wrap-up paper, but it requires a lot of academic thought, well, intellectual thought. A lot of it is philosophical questions, but then you got to back it up with real economic data and stuff. So, Kenny says maybe more volatile. Not likely. Not likely. But maybe. Yeah. But probably not more volatile. More likely less. All right, so like Kitty Cat hasn't done anything. It's sort of, here's the buy zone for the week. So if you're a bull, great. If you're a bear, you already sold it up here, up at this cluster. Okay. Pretty simple stuff. Looks more bearish than bullish, doesn't it? Aussie yen. Here's the one I set up. Do you remember doing this in non-farm payrolls? I went step by step by step and created a 450 pip trade. Booyah! It's not bad. A couple of thousand people watching as we set up a 450 pip trade. Pachow. Look at the projected target. I mean, it's nice. Okay. All right. So what if you're a bull and you do want to try to get back in? Well, identify, in areas of interest. All of this is an area of interest. So wouldn't it be cool if it went down, went up, came down? And this is going to be the real challenge because bears would sell here, and if they don't, then this is heading up. Okay. The weekly buy zone would be here. I'm trying to fit all these different things in there. Okay, there's the weekly buy zone. There's the role reversal of support. And this would be the target for anyone that bought this. And then I'm just playing this right area off of this old left shoulder. Okay, and I would assume that there's still bears here, or there are still bulls that would take profit here and here. And so this area, this right area is going to be the big challenge. If there are heavy bears here, that's where they're going to drop this like a ton of stones. If they lack bears here, then bulls are just going to rally this up big time to the, we'll call it 84.50. Okay? So we don't know what's happening here. But I know if you're a bull, you're supposed to buy this. That's all I know. And if you're a bear, you're probably going to try to sell that again. And depending on how many show up, this will be interesting. Euro dollar. I thought we covered that, but why don't we do it again and then end there? Okay. Okay. So our plan in the middle of last week, or maybe it was Thursday of last week, if it breaks this price, stop trading. And then that set up a potential double bottom where if it were going to be bullish again, it would probably be here, which never occurred. So what I discussed is maybe, if anything, bears take it down into here, take profit, and it comes back up. But that is so far-fetched. I'm not even looking for it. It would have to just happen. I'm not going to set up a plan for it. I'm not even going to participate. I'm not even going to look at it. If it happens, then maybe I'll catch the next move after that. Okay? But as a bull, Ishkaputya, our trade plan on the first day of the month was buy it at 113. Our target was 116, and we only got to 115. And then it collapsed. So we were wrong, but had an opportunity to make 200 pips. Bears, on the other side of that trade, they're like, dude, this is just a simple role reversal. Monthly swing. Like, they're like, this was nothing. So easy. Right? They sold here, the M3. Their target's M1. Easy. Well, because it's so simple, and because they did what they were supposed to do and did such a good job of it, I don't want to trade against them because they're doing a good job. Right? Lower low, lower high, lower low, lower high, lower. Like, yeah, they're probably going to take it down to 111. But if I'm a bull, I don't want to fight that, and I don't want to sell it, right? I don't want to join them, and I don't want to fight them. So take a walk, right? Well, yeah, so Kevin makes a point where I'm simply trying not to be a pig. I need to stay a bull. I need to keep the horns on my head. I need to keep my hooves on the ground, keep my head out of the sky, just keep, right, and keep fighting. So. Yeah, but Chuck, it's just like if I'm a bull, I just need to like ignore everything. Okay. It might be more interesting down here. Okay. So we'll see. But I don't want to be the first one in. Right? I'm in survival mode. Right? I'm in like don't do something and get yourself killed mode. Right? Simply say, you know, not a good day to try to be a hero. Let's just try to get through the day alive. I'm feeling really bad about this one, Sarge. What is that, platoon? So anyways, hey, I got to go. It was real. Have a wonderful bank holiday. Okay? Stay safe, trade safe, be safe. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. Please subscribe. Please like. Please comment. Seriously, please. And I will see you tomorrow. I'll be happy to do CAD tomorrow. The reason I didn't do CAD today was I did oil. And I'm waiting for oil to do something. So you should already know my trade plan on CAD. Anyways, I will see you tomorrow. Once again, thank you guys. I appreciate you. Cheers.